Hey guys, it's Julie here with TipRanks, and today we're taking a look at 5 strong buy dividend stocks for November. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I hope everybody had a fun and safe Halloween. It is November 1st. That means it's time to look at some dividend stocks for the month ahead. All 5 companies that we're looking at today have an ex-dividend date in the month of November. That is the date that you must own a stock before in order to be eligible for that next dividend payment. And with all of those coming up this month, that means you won't have to wait a long time to start collecting that dividend income. So today we're going to take a look at these companies, what it is that they do, what kind of dividend they pay, and of course what those Wall Street analysts are predicting for the stock's future. We found these stocks over on the TipRanks Dividend Calendar. Found underneath Tools, the Dividend Calendar will show you all stocks that have an ex-dividend date coming up soon, showing the weeks here at the top, which you can then break down by day. Down below, we narrowed our search to strong buy stocks and went from there. Just before we get into these dividend stocks, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into our November dividend stocks. First up, we're taking a look at Archrock. They trade under the ticker AROC, currently priced just shy of $20 per share. Year to date, the stock has climbed 33%, and in the past 3 months is up 7.8%. Archrock is a pure-play midstream company with a focus on natural gas compression. Archrock uses its own fleet of compression equipment to provide contracted natural gas compression services. Their fleet is based on both traditional and electric motor drive compression packages. They provide these services to customers in the oil and natural gas industry across the U.S. and also provide aftermarket services to customers who independently own their compression equipment. The company has been paying a dividend for 40 consecutive quarters and over the last 10 years has an annual growth rate of over 9% for that dividend. Their current quarterly dividend is 17 cents per share for a dividend yield of 3.2%. Their ex-dividend date is November 6th for payment on November 13th. They'll be sharing their Q3 earnings report shortly after that ex-dividend date on November 11th. This does follow their second quarter where they did have a slight miss on earnings while revenue was in line with expectations. For their third quarter, analysts are anticipating earnings per share of 27 cents, which would be a 7-cent increase over last year. This follows their Q2 earnings per share of 22 cents, which did fall 3 cents short of expectations. Revenue came in at $270.5 million, in line with estimates and up over 9% year over year. Management said that market conditions for compression remain highly constructive, predominantly in oil plays with associated gas production like the Permian Basin. Archrock does have 5 current analyst ratings, all coming in with a buy. And the average price target is $24.60 for an upside potential of nearly 24%. Looking at those ratings down below, they're all quite closely grouped together. Our low-end price target is $24. We have 3 of those for an upside of 20%, and our high end is $26 for an upside of over 30%. Second on our list is a dividend stock you've probably heard me talk about before. We've been covering it for well over a year now, but it's hard to pass up when we're talking about a solid dividend stock. That is Energy Transfer. They trade under the ticker ET, currently priced at $16.44. Year to date, their stock has climbed 26.7%, and in the last 3 months has gained 5%. Also in the energy sector, Energy Transfer is one of North America's largest midstream companies. They have a wide-ranging network of assets for the transport and storage of crude oil, refined products, natural gas, and various liquids. Their network includes pipelines, tank farms, and terminal and transfer facilities, and is centered on the Gulf Coast. Looking at the scale of the company, their crude oil segment includes over 14,500 miles of pipeline across 20 states, and for their natural gas liquids, they have another 5,700 miles of pipelines. They did have to cut their dividend back in 2020, but have been aggressively increasing it ever since, and that is reflected when we look at their dividend compound annual growth rate over the last 3 years, as it's over 27%. And their current quarterly dividend is 32 cents per share for a dividend yield of 7.7%. Their ex-dividend date is November 8th for a payment on November 19th. They'll share their third quarter earnings report on November 6th. This does follow some mixed results for their second quarter back in August. For that Q3, analysts are anticipating earnings per share of 33 cents, which is more than double last year's. This follows their Q2 earnings per share of 35 cents, which was in line with expectations, and revenue that came in at $20.73 billion. That did miss expectations by $770 million, but grew 13% year over year. During the quarter, they did note that volumes on assets continued to increase during their Q2, and looking forward, they increased their full-year adjusted EBITDA guidance. Energy Transfer has 9 current analyst ratings, coming in as a strong buy with 8 buys and 1 hold. The average price target comes in at $19.56, implying an upside potential of 19%. Looking at those ratings down below, on the low end we do have a hold rating here for an upside of 3.5%, while our high-end price target is $23 for an upside of about 40%. The third dividend stock on our list is Sunoco. They trade under the ticker SUN, currently priced at $51.50. They have seen some ups and downs this past year. Overall, they're up 2.3%, but in the last 3 months are down about 2.6%. Sunoco does manage and distribute fuel products. While they previously engaged in oil, natural gas exploration and production, they did divest these businesses. Back in 2018, they also divested their non-core convenience store operations to 7-Eleven for $3.2 billion. Now, as of 2024, the company distributes over 8 billion gallons of fuel across more than 40 U.S. states and territories, making it one of the largest independent fuel distributors in the United States. They've been paying out their dividend for about 11 consecutive years now, and their 10-year compound annual growth rate sits at about 5.7%. They just declared their most recent dividend, which is about 88 cents per share, and gives us a dividend yield of 6.46%. Their ex-dividend date is November 8th for payment on November 19th. They'll also be sharing their next earnings report on November 6th, and this does follow a big earnings and revenue beat for their previous quarter back in August. For their second quarter, they reported earnings per share of $3.85, which beat expectations by $2.54. Revenue of $6.17 billion grew over 7% year-over-year, beating by $350 million. The company also announced that they completed the acquisition of New Star Energy during the quarter and reaffirmed their full-year adjusted EBITDA guidance. With just 4 current analyst ratings, the stock does come in as a strong buy with 3 buy ratings and 1 hold. And the average price target of $62 would imply an upside potential of over 20%. Looking at those ratings down below, once again we have a pretty close grouping here. Our low-end price target is $60 for an upside of 16%, while our high-end is $64 for an upside of 24%. For our fourth dividend stock, we're taking a look at Essential Utilities. They trade under the ticker WTRG, currently priced at $38.47. Their stock has climbed over 13% in the past year, and in the last 6 months is up just another 3%. Essential Utilities is one of the largest publicly traded water, wastewater, and natural gas providers in the United States. They serve approximately 5.5 million people in 9 different states, providing water services through operating and maintenance contracts with municipal authorities and other parties, as well as providing reliable and efficient wastewater treatment. They operate under 2 main brands with Aqua and Peoples. They've paid a consecutive quarterly dividend for 79 years, and their 10-year dividend growth rate comes in at above 7%. And they just declared their most recent quarterly dividend just over 32 cents per share, which was a 6% increase over last year's. Their ex-dividend date is November 12th for payment on December 2nd and gives us a dividend yield just over 3%. Their third quarter earnings report does come out next week on November 4th and does follow a miss for their Q2. Back in August, they reported earnings per share of 28 cents, and that did fall 4 cents short of analyst expectations. They said that this was due to some weather impacts. Revenue came in at $434.4 million, which did slightly miss by just over $10 million. They said that in 2024, for the second consecutive year, the first half of the year was warmer than normal. In fact, it was 20% warmer than normal in their primary operating area. With 5 current analyst ratings, the stock does come in as a unanimous strong buy. And this is another one that has a fairly close group of analyst price targets here, all of them in the double digits. Our low end is $43 for an upside just shy of 12%. We have multiple at 16%, and our high end is $46 for an upside of 19.5%. If you've made it all the way to our 5th stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at Hasbro. They trade under the ticker HAS, currently priced at $65.76. Year to date, they've climbed 33%, and in the last 3 months have gained just shy of 5%. Hasbro, of course, is the name behind many popular children and family leisure time products. They are a toy and game company creating a variety of toys, puzzles, board games, war games, RPGs, sports equipment, and more. And some of their brands include big names like Nerf, Transformers, Play-Doh, Magic, Dungeons & Dragons, Monopoly, and the list goes on and on. While traditionally they've created physical products, the company is starting to lean more into electronics as well. Hasbro has been paying a dividend for 34 consecutive years and has been increasing that dividend pretty consistently as well. Their 10-year dividend growth rate comes in just above 5%. And their most recent quarterly dividend is 70 cents per share for a dividend yield of 3.2%. Their ex-dividend date is November 20th for payment on December 4th. And they just shared their Q3 earnings report on October 24th. The company came out with an earnings beat and a slight miss on revenue while maintaining their full-year guidance. They reported Q3 earnings per share of $1.73, beating estimates by 44 cents per share. Revenue came in at $1.28 billion. That did just miss by $20 million. Their stock currently has 10 analyst ratings, coming in as a strong buy with 8 buys and 2 holds. And the average price target of $82.50 implies an upside potential of 25.5%. Looking at those ratings down below, on the low end, we do have our 1 hold rating here with an upside just shy of 2%, while we have several around the mid 20%. Our high end is $95 for an upside of over 44%. So that is a quick look at 5 stocks, all with ex-dividend dates coming up in the month of November. Let me know your thoughts on these stocks and what other dividend stocks you love lately. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.